In this video, I'm going to talk about marking up trades. I'm going to cover 3 trading days from last week, and I'm going to show you the way that I mark them up. I'm also going to show some examples of how other traders mark up charts, and I'm going to give you some recommendations on what I'd like to see in this course. I'm using this document, which you can see, which is called Trade Markup Examples. Here's 1, here's 2, and here's 3. What you're going to notice is there's a chart. I've marked up trades, long and short. I've marked up exits. I've also put where my stop location is, and I've actually got my fib tool to put measured moves on there. I then take data from here and I put it into a little spreadsheet, and then I screenshot it and put it into a Google Doc. You'll have access to a template spreadsheet here. On this spreadsheet, gray means a formula, so you don't put anything in there, and we're just looking for data in the white cells. Now, the reason I mark up my trades in this way is because it has a lot of information that I find very important to keep improving. Before I go through that, I just want to show some examples of how traders mark up their trades. Now, over the past few years, I've had several hundred traders send me charts, and honestly, every single one of them is marked up differently. I want to just show you some examples of how other traders do it, what's good about it, and what I think can be improved. The most common type of markup that I get from traders, and this is not picking on any particular trader, is this kind, where it's mostly discussion about the chart. That's great, but that's not really of interest to me. I'm more interested to see where was your stop, where was your entry, where was your exit. I can guess that the purple boxes here are the trades. You can see we don't have the point count on the side here, so I can't actually tell how these trades perform. Another example is this, where you can see, I know this is NinjaTrader, and we've got the little arrows for long and short, and I can see roughly where the trader has entered and exited, but it's not very clear. So they've put a box around here, a box around here as a set. But once again, I can't see the mathematics behind these trades. And that's where we're going to get some real changes to performance to looking at those math. It's also not clear, okay, was that a sell, sell more, exit the whole position? Or was it sell, exit some? Okay, because we've sold 2, we got out of 1. Now we're selling another one, then we're exiting. It's just not clear. So that's another example. And I'm sure you've probably got your own example. This is another kind where we've got dots, and that's great because, with a bit of practice, we can work out what's going on here. You see, it's very difficult to see what's going on here, and there's a lot of chat. Now, I've worked with this trader before, and they've put the, initial risk and actual risk here, but it's a little bit more difficult to observe. So I could take you through a whole bunch of examples, but I think this is very important. So I use red for sells, green for buys, and a blue for an exit. So I can see there are 2 shorts here, 2 longs here, 2 longs. I can see my initial risk. Initial risk is where the initial stop is. And then actual risk, I want to see where I moved my stop to during the trade, because I want to know whether I managed that correctly. That's on the way down. You can see the measured move red lines here. So I was able to get out at 2R. Then on the way up, buying this bull bar with a stop down here, and then looks like I've added on with a shorter stop. Now, I've got full copies of these images, and you can take a look. And if you've got any questions, you're welcome to ask. But it's the data down here I want to talk through in this example. So these are the 2 short trades down here. You'll notice this column right here, 5-minute ABR. You might have heard of ATR, average true range. ABR just stands for average bar range. It's just a measure of volatility. Now, we know if we're trading the ES futures contract, the average bar range at the moment, usually is about 5 points. For the last week or so, it's been about 10 points. So that's about double the size that we're used to trading. And this is important because I need to adjust my size down based on that. If we just look at points without the volatility, it doesn't make a lot of sense because it's easy to make 50 points if all the bars are 20 points tall. But on a regular ES day, the range of the day is 50 points. Well, that's a different story to get yourself. The table, just a few items. What instrument? So date, instrument, long or short, measure of the ABR. You can have that on your chart. You can use an ATR or ABR if you've got an indicator. The difference between ABR and ATR is the gap. So ATR takes in the gap, average bar range doesn't. Personal preference, I like ABR. When I take a trade, I put a percentage. Okay, 40, 50, or 60%. and just put the number in. What's the risk reward I need? Is it 1-to-1? Is it 2-to-1? Just to make sure before I take this trade, I know where my target's meant to be. Initial risk, so what's the distance to your stop? And then actual risk is what was the, how far did it go against you? On this first position here where I've sold the pullback, it only went against me 2 points. So the actual risk is 2, but it's 9 points away from the stop. So that's gain or loss, 22 points, happy days. But that looks great, except we know it's a smaller size. So settle down. And then win or loss or break even. And then these are 3 formulas that get calculated. ABR is saying 2. And that means that this win, even though it looks like a swing win, was actually only 2 bars. So it's actually more of a scalp. So it's good for relative judgment of your performance, and I'll get into that a bit later on. For now, I just want you to track these results and then we'll work through them. Initial risk. So this is the 2-to-1, 1-to-1, 2-to-1, 3-to-1. So, okay, that was good. I had a small risk and a big win. So that's good. And then actual risk was very good. This is not so important for me as a trader. Some traders have a bit of a problem with this. They enter very late. The market goes against them a lot. And then that means this will be very small. So the higher this number is, that means the better your timing, synchronizing with the market. But we're really focusing on the initial risk. You'll notice some of these auto highlight red. I've got some formulas in the spreadsheet for you. And all that's saying is when it's below 1, that my win was less than a bar range. Okay, so that third trade here, that buy was a win. Okay, well, why do I care? Well, I want to care that actually I closed it a little bit early, or I entered a little bit late, but I shouldn't be taking trades to get less than a bar range. That's very high frequency scalping, and that's not it's not something humans are very good at, but computers are. So I don't really have a big edge there. What the red here is saying is that this was actually a half R trade. This is less than 1-to-1. So this is warning me that where I bought here, yeah, it's a winner. I could just pat myself on the back, but actually I took a lot of risk for not a lot of reward. And looking in hindsight with this whole day, hang on, you're entering the middle of a trading range. So that gives me a bit of context for the day. Said, okay, well, really, I should have been ready to buy here below yesterday's low, as opposed for waiting until the move's almost over, ready to get in. So anyway, marking up charts, stats. I won't go through every part of this because you're able to take a look and ask any questions. Here, this was when I was in the trading room. I took 2 buys. I scalped out of one, breaking even on the other, and then I took another buy. So you can see both of these are scalps, which is pretty common. When I'm streaming live, it's a little bit more difficult to manage the trades and present. It's easy to lose track of stuff. So I generally just scalp. So if all my results were red like this, then I'd need to work on it, but I'm pretty comfortable with where they are at the moment. So you can take a look at that. And then here my only trade was a long trade for a reverse. So I've got 3 days there for you to take a look at the markups. If you've got markup questions, please just send me a message about it. You'll notice I've also got a line here which measures how long I was at the chart. So by putting this line in, I know I sat here, did nothing through here, and then traded. But sometimes when I get charts from traders, I don't know whether they traded the whole session or they just turned up, took a trade, and then left. So that gives me an idea of what parts of the market you're comfortable trading. Anything else here? I often write when I got stopped out if it's not clear. There we go, marking up trades. So this is something we'll work on as we go, but I really would like to see you either review last week's trades using this, or this week, record all your trades using the spreadsheet. And if you get stuck, just let me know. I really want to see you put in the data as you're taking trades. Seeing here, for example, see this trade here, 26 for an initial risk on ES. Okay, even though it's only 2 bar ranges, that's a big risk on ES. Okay, that's half a day. Why am I buying somewhere with a stop half a day's range below? The answer is I'm probably not really sure what I'm doing. I'm probably just kind of limping into a position. I wasn't able to aggressively take this one. I wasn't able to take this one. So it's giving me a way to see what I'm good at and what I'm not. So anyway, that's the video about trade markups.